camera there, I think.
Huh?
You wanna start your reading stage, or you wanna come in when I invite you?
I don't mind. I'll come in when you invite me.
Yeah, so you better go down there.
Okay.
What? You ready?
I've never seen a live stream be so. It's not live yet, is it?
At the beginning, also when I talk to the public, or I talk to the people. I talk to the people in the live cast only. Huh? I'm talking to the live cast. I'm telling to live because we also have a public here. We tell to the public we are also live on the.
I would say switch between both, like we have people sitting
So
behind
meaning is
and
gonna show
also
the
we are
public
so
or only me. When we introduce, we have a public. Is it the public or not?
you brought Willy on the stage and it will be
I introduce Willy and I invite him on the stage. So welcome, then I leave. By the beginning, if I'm saying we have a public, does he switch to the public and show the public hi or no? No.
no, we just go.
Ah. Hello, everybody. Welcome to Blockchain Zoo. We are having a live cast. We are hosting a great guest. Is Willy Woo. Is a financial analyst. Is partner of Adaptive Capital, and is a pioneer on on-chain analysis. And we're going to present today investing in crypto as a data-centric view. I want to say that Blockchain Zoo is hosting this event. We are not associated with Adaptive Capital, so financial advice that will be received during this presentation refer to them, and we are just innocent bearer of the information. Thank you very much again. We have a public here. There will going to be question asked. Enjoy the live cast and see you again. Thank you.
Thank you, Roberto, and thank you, Blockchain Zoo, for hosting this. We did this 2 weeks ago at Hubud, and we wanted to do another one, and Blockchain Zoo's been kind enough to host this and even live stream it. So this presentation we're live streaming, so like some of these charts that I'm going to present might not come through very well. So any of you guys in the chat room, live chat room, cannot see it. If you cannot see it, just let us know in the chat room, and I'll get Rohit to put it up on screen for you. So anyway, without any further ado, my name's Willy Woo, and my background is from the tech startup world. So I view the lens of crypto investment through this background. It's not from a standard like Wall Street quant view. So a little bit about the stuff that I do is I do a lot of work with data. I started off looking at a lot of data on the networks, and that's a new field called on-chain analysis. A lot of my work's been published on CoinDesk and Forbes, and these days I'm a partner at Adaptive Capital, and we're a new hedge fund with Murray McMurdoch and David Poole. We do a lot of on-chain analysis to help us kind of get a predictive view of the market, and it allows us to allocate capital more efficiently. And also I'm an advisor to Level, which is a new regulated exchange coming out in America, and it's really pitch to bring it more into the mainstream. So, oh yeah. So who in the audience owns Bitcoin? So most of us, right? Who owns altcoins? Yeah, okay. And all right, so who came into it this year? Who bought into crypto? Bought your first crypto last year? Well, this year. Last year? 2017? 2016? Anyone before? Okay, 2014. Okay, it's a real mix. So 2014 up to here, it's just good to know what sort of depth we're talking to here. So what is Bitcoin? You know, there's a lot of definitions for Bitcoin. I like this one particularly from Naval. Naval says that it's freedom from oligarchy and tyranny, dressed up as a get-rich-quick scheme. This is the one that I use. Someone figured out how to make a internet-native digital scarcity, right? So everything on the internet can be copied, but Satoshi 10 years ago figured out how to make something that could not be copied. And when you have something you cannot copy, like, you know, say fine art, it's worth something and you can store value in it. And so Bitcoin is not really just money or value stored in something. It's the invention of an internet-native digital scarcity. And with that breakthrough, software can now eat the financial world because it's programmable. And we're going back to how much value is stored in buckets. This is a little snapshot of the world's largest macro asset classes. You got real estate at the very top end, which is $280 trillion. Fiat currency at 90. All of the public traded stocks in the world only come to 70 trillion. Gold at 8 trillion, and Bitcoin's this tiny little thing at 1/7 of $1 trillion. It's you know, it's like 50 times or smaller than gold. And so, if you were to zoom out into the long picture, I did this as a tweet, like I think 2017, and you know, it was like we used to say. Bankers used to call this thing a bubble, but I would say students of history call this the dawn of a digital age. This is like kind of like the 10,000 year view of cryptocurrency, because we used to use gold as money or precious metals, and then we traded paper around gold as society got more complex as we moved into the industrial age. And then somewhere along the line in 1973, we decoupled that link of trading paper around gold, and it just became, you know, what we call fiat money, which is just the belief that it has value. And now, in the last 10 years, we've had this ability to have a scarcity on the internet, and we can use it as a money, and it can be transmitted on the internet. And so we kind of have had this revolution where all the largest companies in the world are now digital. All of our services are now coming online. The only thing that we never solved was how do you do money online, and that was solved 10 years ago. And so what we're seeing now is this tiny little bubble, not like a financial bubble, but this tiny little dot of 1/50th of gold, 1/7 of $1 trillion, expand into a larger value set where it can make a difference and exist as a digital form of money. So just looking at how big it is today, we're 1% of the way to, 1% of the world owns this. And it doubles every 12 months. I did this research back in, I think, 2017. Michael Rocks, who is from the Cambridge Centre of Alternative Finance, he's done some really in-depth studies around like by interviewing the industry, and he's come to the same sort of figures. Like in 2017, we had a 4x growth in the number of people come on board, and even last year in that very terrible bear market, we still doubled the number of people coming in. So this thing's growing exponentially, kind of like a Moore's law of adoption. And in terms of how big it is, it's 1% of the world reserve currency right now, the M2 money supply. And this chart, can you guys see that on the live chat on the stream? Kind of. Maybe we can flick it for the audience on the live stream. But you can see here, this is the trajectory of the 10 years of growth for Bitcoin. All right, now it started off in 2010 when the markets first opened, and every single coin in the world, every single Bitcoin in the world was worth $1,000, and we've grown to $150 billion today. And this chart is not a linear chart. We're going up through powers of 10, all right? So 10x each point of the way. And so if you chart this over the long run on a time scale with a 10x going up here, it turns out we're going to cross this line with, this line here, the first horizontal line on your screen there. The lower horizontal line is all of the cash and checks in the world, sort of like a short-term money supply for USD. And all of the USD in longer term savings and the shorter term savings is this higher line here, and you can see we're on track at least to cross this within the next somewhere in this region, 5 to 10 years. So when I say it's tiny, it's 1/7 of $1 trillion, and people think, the bankers think it's a joke. We're actually 10 years away from Bitcoin challenging the world reserve currency for scale. And I think what you'll see when that happens is they're gonna, the media's probably gonna say Bitcoin's destabilizing nations or something like that. It's if we get to this point here, we'll have a new kind of currency. Next slide. So here's the zooming into the Western world. I said 1% of the world, but most of the activity is in the Western world, and we're in this zone here, the first 15%. It's actually somewhere in this blue zone, and we think that by 2020 onwards, we may be hitting the early majority. This is kind of the pioneering, early adopter phase of any kind of adoption of technology. And we're only a year or two away from the very first early mainstream. And we kind of got that in 2017 when the whole industry exploded, and we started to see a CNBC cover how to buy Ripple and how do you buy Litecoin on national television. And so I just want to address this kind of notion where people, in the early days, people made 1,000x, 10,000x, multi-millionaires would pop out of nowhere by holding this, and everyone thought this thing could not possibly happen. It's got to fail. It cannot be a get-rich-quick scheme that will last forever. And I just want to show you this because I come from the tech world. This is what happens in our industry. Like, someone comes along and they have an idea, like maybe it's Jeff Bezos, it's Amazon, he's thinking, I'll sell books online. And he's going to found a company, he's going to convince his friends and his friends that are into business, they have a bit of money, they may have started companies before, they have advice, and he asks them to come on board as investors. And then this kind of growth in the company starts to grow, and eventually gets to a point where it looks like it's promising, and institutional money comes in. Venture capitalists get interested, and they're interested in taking this little idea, say it's Amazon selling books, to taking it big, the everything store, something that's like $100 billion company. But before it gets to that, there's this point here where they will back this, and then they will sell this onto the public markets through the IPO process. And that is the investment cycle for a new technology. Founders, angels, VCs. That cycle is usually a 1000x gain for them. So with technology, when we bring out a new technology, it's the common norm to get 1000x. Now this is the interesting thing about Bitcoin. Bitcoin, that was founded by the cypherpunks. The people that bought it in the early days were the drug money, and it was the libertarian money. And then the general public started to buy it in 2017. And the institutional money, the investors that are investing other people's money, they got in last. I don't think that's really happened anywhere before in history, that the institutional, the smart money didn't get into an investment before the public. And that's because there were no rules around this. The regulation hadn't been developed, and those rules prevented the institutional money from getting in. And so the public got the 1000x. And this is why we have a lot of millionaires walking around that bought a little bit of Bitcoin because they wanted to buy some marijuana. So let's move to the next slide. So when you invest in a really early stage investment like technology, it's very prone to failure, but not only that, the volatility of the asset is, it's very risky, and the price swings. So this is what it looks like for Bitcoin. Can everyone see that chart on the live chat? Good? Okay, good. By the way, kind of from here on in, people are free to ask questions. I'll just make it interactive if you've got any questions. So like right now we're well, when this was taken, 15.4% volatility. That means that on any given 60-day period, you can expect with a roughly 2/3 chance that the price will swing within a bounds of 15%. And then the other third is it's going to go beyond that. Like, so this asset swings massively. Compare that to, say, your savings bank account, which is rock solid. You get a gain and it doesn't move. A dollar is a dollar. In the early days, it used to swing 100%. So was there a question or no? Okay. So like, if you look at this tweet I did in 20th of November 2018, Samson Mo said, "Don't worry about the price," because what happened on that day, you guys remember? Yeah, it's like we crashed from $6,000 to 4,300 or something like that over a matter of 48 hours, like massive crash. And so you're wearing a lot of cray price action, and so I said, riffing off Naval, that it's a freedom from tyranny and oligarchy dressed up in a get poor quick scheme. But that's really what it feels like when you're holding Bitcoin sometimes. But if you're willing to hold Bitcoin over the long period, this is what it really looks like. This is a chart of the risk-adjusted returns for Bitcoin versus the major asset classes that people store their value in. And I've done this over a 4-year hodl period, which is roughly the boom-bust cycle of Bitcoin. You can see that it's by far the highest returning asset over everything else. This second line here below it is US stocks. The next line below it is US real estate. The debt markets is red. Looking at gold, which is this purple line, it's way, this is the real gold, the physical gold. This is the digital gold. And so what's really pushing the returns really high here, adjusted for your risk, is essentially the whole world coming into it and blowing up the value of this asset. But yeah, if you're going to hold this thing for 4 years, you're getting more returns for the amount of risk you're taking than any other asset on this planet. So I'll just now move into this phase where I talk about the market cycles. So again, if you've got questions, just raise your hand, we'll get you a mic.
One quick question, Willy. Thank you. The previous figure where you said the amount of people using Bitcoin doubles every 12 months, what kind of numbers and data are driving that statement?
So there's been many touch points on this. Michael Rocks has done probably the most comprehensive. The lower bound is 35 million people, because that's the unique user accounts on some of the industry infrastructure, say an exchange. So 35 million accounts. But that's in one. That's unique for one exchange. If you sum them all up, it's 140, which would account for 2% of the world. 35 million is 0.5% of the world. So you can think of it somewhere in between. I did an estimate a while back, and it came to about 1%, and it was based on some early estimates of where we were when we were counting wallets, and then extrapolating a 2x since the growth I used Google Trends, and you could see that the interest in searching the price of Bitcoin, BTC USD, doubled every year, and people who search for the price of Bitcoin are likely to be holding it because they're interested in what it's worth, or they're about to buy it. And that had this really constant over a 6-year phase of doubling every year. And so we went to an early point, and then we extrapolated out. I think Ari Paul did another. There's been a bunch. They all come to about 1 to 3%. I'm going conservative. It's 1%. Was what I've put up, but it could be much higher. And we can't tell on the blockchain how many people it is because it's pseudonymous. You can see how many wallets there are, but you don't know how many people it represents. So yeah, we're like every asset. You have a cycle, a boom bust cycle, and Bitcoin's no different. It's very young. We've only ever had 3 prior cycles, and each one of these cycles were very, very different if you look at the underlying structure of it. I'm going to say that this stuff is really nuanced, and I'll go over. Last time I went more in depth in this, but I think people here are relatively savvy, so I won't go into the details of what happened along that journey, because you could write, a 10-volume novel on this story of Bitcoin. But we really, the early investors in Bitcoin were the miners, and once the coins were mined, people could actually buy over person to person. We call over-the-counter deals, trades. And then when Mt. Gox started around when was it? 2011, early 2011, we started to get this sort of market developed, and we had early speculation. And then this later cycle, the general public came in, and probably an untold story is that halfway around 2017, the quant funds came in, and the price action of Bitcoin started to become very, what would I say, manipulated or controlled. The price action is controlled by larger players that that are in the markets, and they're out there to make profit. And you can even see, I can see, because I know this stuff, that the price movements here are very robotic. Look at that flat line there, up, down, up, down, up, down, up, down. Compared to the organicness of the prior cycle, this is the organic feel of how Bitcoin traded amongst the OGs. This is how the algorithmic and the quant funds trade, and you'll notice that these shapes are the same shapes that drive Forex. So the quant funds are in, the institutional money is going to come in this cycle, because the rules are now being put in place and the infrastructure's been built. So, yeah, moving along. So if you're an investor, this is really getting into the nitty gritty of it. If you're an investor, one strategy is just to buy your coin and hold it. You just wait for more and more and more people to believe this thing has value, and it grows and grows and grows into this major macro world asset, and you hopefully get to be a little bit wealthier by holding it, or a lot wealthier for some. Another strategy, if you're a bit more active in the markets, is when you're at the top of the market, just like people sell their houses at the top of the market, you try to sell your coins. It's not necessarily recommended if you're not savvy, but if you do want to play this game, then this is a very simple rule set you can use. This black dotted line is the 200-day moving average. So it's a very well used average in trading, and within Bitcoin's entire 10-year history, whenever the 200-day moving average is crossed below by the price, and I've circled it in red, that's a confirmation of a bear market. And then when it crosses above, it's confirmation of a bull market. So if you sell there and buy there, sell there, buy there, and these are powers of 10, you actually gain a lot. So in these times where it sort of fakes out, it can break, and so what you're looking for is like breaking and staying above it for a decent amount of time. I say around 8 weeks, and then that's a confirmation. We're already in that zone now, so according to the 200-day moving average, we're now in a bull season, and now it's in the up cycle. By the way, the last cycle here, this was actually if you caught the bottom there and you got the top there, I think it's about 130x, right? This is, and it's over what, 2.5 years? Someone can work out how many 1,000% that is. So this is a crazy asset class. It's going up really quick. Even these little moves here are massive in terms of sheer numbers. And just turns out the 200-week moving average here, I've put, catches the bottom. This is a thing we call mean reversion. A lot of these things, when the price goes a little bit, ape shit, a bit crazy, they always come back to the long-term averages. And so, I think I tweeted this out quite early on in 2018, saying we're waiting for the price to come back to this dotted line, and we're waiting for this 200-day moving average to converge. When you see these two converge, that's probably the zone where it's safe to buy the asset again. So that's that. By the way, this is all I'm looking at here is two things: the price on the vertical axis, and time along the horizontal axis. Yeah.
So we have a question from the chat. I think it might relate to the previous slide. It's
this one.
Paul Punendis asks, would quant funds explain the divergence in price to organic money flow on chain?
Yeah, that I would certainly say yes. I mean, I've tweeted on this. I think currently we're diverging right now, and it is very large market players that are squeezing the price. I think I'll show you that a little bit later. I'll move forward to, I've done this thing where we've looked at just price, and the interesting thing about Bitcoin is that it's got a blockchain. It's a ledger. It shows the capital movements of investors and how those funds are moving around. And so, who here sees a correlation, a similarity between the red line and the blue line? Anybody? Yeah? Okay. So the red line is the value of Bitcoins. It's market cap of Bitcoins. And the blue line is how much money is moving on that blockchain at any one day. And you see that they're very, very correlated. They're very similar. So in October 2017, I did a ratio, a simple ratio of the valuation of Bitcoin to how much underlying movement there was on that blockchain. And I showed it to my friend Chris Berniski, who was an analyst at the time. He was writing a book on investment, and he gave it the term network value. He's trying to define a lot of these terms. I said, "Do you want to give this a name?" And he said, "Let's call it the NVT ratio, network value to transactional volume ratio." And so we called it NVT ratio, and he was kind of the first to popularize it because he was on road shows promoting his book, I think, and so forth. So this is it, and I used to call this the PE ratio of Bitcoin, kind of like the price earnings ratio. We do this in stock markets. We value companies, and we look at how much does the value of that company trade against how much underlying profitability this company has. So we have a very high PE ratio, means that people are valuing this company speculatively very high against the underlying. You saw this with internet stocks, actually, because they didn't really make much money, but people valued them very high in the early days. And you see this also happening with Bitcoin. In the early days, it was a very high speculative value, and then it dipped, and then it seems to oscillate around this this medium, this sort of like flat line here. And you know, it's not really a PE ratio. It kind of is. It's a ratio of how much we value it to the amount of capital flow on it. There's a underlying reason why this relationship works, which I might get into a bit later. But one thing to notice is whenever the price is like overextended and coming back down, coming off a market top, you'll notice that NVT comes up high, that the valuation is too high compared to the underlying flows of capital on the blockchain. You see it again here. And so this is what, this is what it was really useful for, because this is the problem if you're going to be active in the markets. If you choose to be active in the markets, you'll see the price, and it does this all the time. It comes up, and it peaks, and it comes back down, and it wiggles, okay? And you don't know whether or not we're going to wiggle and consolidate. We had this, it can overextend, and then it consolidates, and then does it carry on up, or is it not a consolidation, and it's overvalued, and it's going to come back down to a crash, and it's going to set off the next recession, the next downward phase of the market. And so this is what NVT is good for, and this is what I proposed it to be good for. And it is like, you'll see these little bumps. Again, these are huge, this is log chart, so powers of 10, remember, but huge bumps, and then it'll come back down. As long as this NVT ratio is low, meaning the underlying investment activity is very high on the blockchain, you're all good to go, because there's a lot of investors coming in and buying this asset. Remember, if I'm going to sell a Bitcoin to Deborah over here, she's going to pay me cash. I'm going to give her a Bitcoin. It lands on the blockchain. 1 Bitcoin of volume goes through. So we're counting people buying in when we're looking at the throughput of this blockchain. One half of the trade. The other half of the trade is off-chain. It might be US dollars. It might be something else if you're coming in from an altcoin. So, just to reiterate, this is the 2013. There were two bubbles, one bubble here, one bubble there. And the price went to $258. It came down to $45. It went. I think it was even high. It was a huge. Like if you were looking at hourly candles, it was like 80 to 90% retracement. You think the world's over. You know, people would be saying that the end of this asset class, but actually, NVT was well within its zone. Like I think the halfway mark is here, but back in the early days, I just had a zone where it was safe. And so it was perfectly fine. This is just the signature of a schizophrenic, crazy, volatile asset consolidating in early 2013. Plenty of investment volume. So you would have sat in this, if you had NVT back then, and you would have ridden this from $250 all the way up to $1,200 without worrying. And so that's one of the well, it is. This is the first on-chain indicator. And this is October 2017. And then in 2018, we had this Cambrian explosion of on-chain indicators. Get the mic, because.
So on NVT, 2 slides back. Now, is that right vertical line on the bottom right the launch of Liquid?
Yeah.
Okay, so I have a question on that.
Yeah.
Is the data coming from Blockstream's Liquid public, and have you factored that into any kind of analysis?
So yeah, so there's a NVT relies on seeing the capital flows on the Bitcoin blockchain, and one of the solutions to scaling and moving capital on this chain without congesting it is to break it off to a side chain where you can move capital onto that side chain. That was, in fact, yes, that was launched here where that red line is. And the properties of the Liquid side chain is that it uses confidential transactions. So we can't see the volume going through it. And I asked Adam Back, Blockstream CEO, one of the kind of inventors of the components of Bitcoin, is anyone using it? And he said to me, not really, there's not much volume on it right now. And that there might be, they may report the volume, but we don't know. But our sense of it right now is that there's not significant volume moving. And we're finding that the data on a lot of this stuff, when you zoom into it and get really analytical, it still makes sense. It doesn't feel like a lot of volume is being taken off that, and there's a picture we can't see.
Does it need to come back to the main chain
it's like I'll just say that Adam Back thinks that HODL, storing long term in your vault, in your wallet, is going to be on the main chain, because on the side chain, it's pegged through a federation of trusted parties. You kind of trusting the group won't rip you off. It's always safe to be in this trustless environment. We don't have to trust anybody. And so, but who knows? Because in the future we might decide it's trustworthy enough, and we'll hold LBTC in our wallets. Yeah, did that answer the question? Oh, did we? We didn't do the mic thing, eh? I can repeat the questions if it's too much.
Okay, there's a question from the chat.
Yeah, sure.
Okay, Stephen Licari asks, what do you think about the NVT signal staying in the red since the movement from $40 to $100? And are we overvalued right now?
Okay, I'll switch to the next slide, and very astute psychic question there, because we're going to go to NVT signal next. So I'm going to cover 2018 because we had a lot of innovation in this space of on-chain analytics, and this was the next thing. Dmitry Kalichkin he came up with doing NVT, but he was kind of going, what kind of ratio did I do? I didn't actually say exactly. I didn't say exactly the formula. I said it was 1 divided by other, and he just did this thing where he's like, I'm going to divide the market cap, but the moving average over 90 days of the volume going through it, and you get this different kind of line. And he tried all these different moving averages, and he found the 90-day moving average when you divide the valuation of Bitcoin by the 90-day moving average of the value moving, the capital moving through that chain, you get this kind of shape. And look at these peaks, there. Whenever it peaks, it's the perfect time to sell, and it's always picking it to the point there, right? And the question is, we're in the red here, and what was the question? Is it going to stay in there?
What do you think about it
staying in there?
What do you think about it, the NVT signal staying in the red since 4200?
Since, okay, all right.
And are we overvalued?
Yeah, I think we're overvalued. We're overvalued. Like, so if you were to use NVT signal, yeah, I'll finish this. Go back to the question. If we were to use NVT signal, like I added this little bit extra where it was a trend line break. Whenever the trend line breaks, when it's in the red zone, it breaks that trend line, that's the time to get out. And if you were using NVT signal back in 2017, which wasn't available back then, you would have got out at the very top at 19,000 plus Bitcoin. Remember the 200-day moving average? It was like you would have got out months later when it was down to 12,000 or something. So NVT signal using on-chain data showed that you could use that blockchain to be much more responsive than traditional technical indicators that typical quants use on just price action and sometimes volume. And yeah, and this was the first public call I made with NVT because it was only invented around here. And we were down at the bottom here, and I said, this is the bottom, the local bottom, and it popped. So I tweeted that out, and there's been like, I don't know, a dozen calls using NVT signals on my stream, and I think it's about like, it's something like 12 right for 1 wrong so far. And it's I interpreted the 1 wrong, you know, it's interpretation more than I think the signal. But to answer the question, do I think we're overvalued? Yeah, I think we are. This is a few weeks old, but we're up around here, and it's broken the trend line, which means it's time to short this asset. Look at this point here. It broke the trend line at this point, so it broke here, but everything went flat. NVT signal said we're way overvalued, but this thing was flat and it didn't come down. I remember Mike Novogratz said the bottom's in. A lot of people said the bottom's in. We've done this nice carve out. You can even see, if you can look closely, you see the 200-day moving average there, and it looked like it would pierce that. Remember, when it pierces the 200-day moving average, it's a good sign we're about to break into the bull season. But actually, Signal came in and said, no, it's overvalued, and it was a shorting opportunity. It just took months to play out. And the reason why I think it took months to play out was the quant funds were there, and they were holding up this price with buy walls so that they could get out at high values, and then they let the walls drop and the price collapsed. So welcome to the quant fund world. Yeah.
Yeah, Willy, just a question on the NVT signal. Like the NVT makes a lot of sense to me, makes like a lot of logical sense. But with the NVT signal, because it's such a recent metric, it almost seems like he's overfitted the relationship based on the past data. He's like divided it by a moving average where this signal corresponds with previous highs.
Yeah.
But because the past doesn't predict the future,
Yeah.
it may not have much predictive power for future price movements. It may be, the model may be overfitted. What do you think about that?
I think there's because a lot of people say this. They say the past does not predict the future, and then every single quant, what do? They run a backtrace. They try a model and they check it on the all available data to date. So though it's kind of true, you can say, yeah, well, the future's going to be different. Yeah, this is the problem with all of this stuff that we're doing. It's so highly experimental because we've got such a limited backtrace on this. And then so that's one problem, because it's only 10 years old and we already had 3 cycles, and the first cycle we can throw away because it's completely different dynamics around mining. We didn't even have a proper market. And then we had this kind of early trader market, which was the early speculators. Now we've got these quant funds in here, and the shapes are changing, everything is changing. And so even when we run these back traces, they're not very, like, you'll see that all the NVT stuff cuts off here because we just throw away the early stuff, which isn't actually rubbish. It's actually describing what happened, but you have to interpret it differently. But yeah, I don't know. It's like I'm not. I don't think it's overfitted. I think that this thing will continue to work for a while. I don't think it'll work forever, and the reason why I think it won't work forever is because a lot of the volume is moving off. It's going to move off the main chain, and like if you were to say, what is this freaking line? What is it? It's money moving on the blockchain. What does that mean? It's like, okay, say you're going to dump an asset. What are you going to do? You're going to send it to the exchanges. So it moves on the blockchain before you trade out of it. So there's a fundamental thing happening here that you're picking up. So that's why it's kind of, there's a lot of first principles on it. It's hard to refute, but the thing that's shaky on it is the how much of the full signature are we picking up? Because now we've got companies like Zapo who, store their digital gold or their private keys inside a Swiss mountain, and then people go, I want to buy some, I want to sell some, and it moves between people's ownership. And we're not sure whether or not, I have to find out actually, whether or not they move it between different private keys, where it moves on chain, whether it's done off chain.
Question from the chat. What are your thoughts on this being a gigantic bull trap according to NVT, and we're going to 1,000?
Oh, my friends. Tone Vase, Vinzen. We've been a whole... if you got 5 hours, there's a whole... it's kind of, you can search Tone Vase's top viewed episode. It's like the second most or most top viewed. There was 50,000 views on it. We went for 5 hours debating this. Obviously, I was on the bull side, and that this is not a fake out. This whole thing happened. We've got the price chart there. This whole breakout up here, I think that we were discussing back down here. And they actually drew charts that would hit this, we'd come back down into this region here. And then, I guess a lot of this will be answered as we go through this Cambrian explosion of new blockchain indicators too. Because this is what we did. We actually said, this is the data that the network is telling us, and this is the reason why the bull market is in. So this is this is HODL Waves. This is another view of the blockchain by Unchained Capital, another fund, and this cyan line here is the value in wallets that are like, what is it? I think it's like 5 years or older. A lot of these are lost coins. This zone in here. This is kind of like 3 years to 5 years. That percentage of coin is in wallets of that age, and so forth, right down to here. This is like 24 hours. This percentage of this entire Bitcoin money supply, this amount in here, is been sitting in wallets for 24 hours or less, 7 days or less, 1 month or less. So we're starting to see that it's kind of like the proportional breakdown of how old the coins have been sitting in everybody's combined wallets, and you'll see these beautiful waves that happen. And you can see behavior. You can see like these lines here is like kind of the, what is that? That's like 3-month line, I think it is. You'll see they go up around the peaks, and then they come back down, and they do a wiggle, and they move back up, and you can see that we carve as we carve these bottoms, these waves that follow that, and you can see these divergence patterns, and you can go really deeply into this stuff. I'm just giving you an overview. So what was that? That was April 2018. October 2018, I guess everyone took a break for 6 months or something. Like Nick Carter and Antoine Lecalvez, those guys came up with realized cap. Essentially, this is like they valued the network not on market cap. Market cap is like all the coins that are floated, all the coins in existence multiplied by the latest price. They said, let's just add up all the value of the coins at the price that they were bought at. Because remember, this is Bitcoin. We've got every single transaction on the blockchain. So we go, okay, that coin, when did it move into that wallet? Okay, it was a year ago. What was the price a year ago? It's that price. Okay, that's what that person paid for it. Sum that all up, and this is what, and you put it on the price domain, this is what the entire market paid for their coins. This is right now, in this zone here, the price is trading higher than the realized price, which means that everybody on the market in general is in profit. Whenever it's below, it means the market in general is in deficit. The latest price is below what the market paid for their coins. And so whenever in this, below this zone here, it actually shows you that we're most likely in this sort of bottom accumulation zone. It's a good time to buy. I really like this indicator. And it's very fast responding. Whenever the price goes into a bubble, it responds very quickly. So my friends at Adaptive Capital, my partners there, Murad and David, they were the first to grab this within days. I mean, I even saw this. I was like, wow, okay, let's do Nick presented this on stage, and I was like, and we're not saying this is a trading indicator. I'm like going, yeah, it is. And and then so Murad and David were the first to go, okay, here it is as a trading indicator. They did the ratio, kind of like what I did, the ratio of on-chain throughput, and they did it with the realized price, with the market cap. So like NVT, this is another ratio, and you can see it oscillate between market tops and market bottoms. And then our friend Mr. Anonymous All Wonder, that's his handle. He's done a lot of these regression, like he does these really nice arcs showing the adoption curve of Bitcoin as it relates to price. He did this Z-scoring of it, and you add a nice little Z, and it's a statistical method in which you kind of you normalize these tops by, rather than measuring the ratio, you're kind of using standard deviations. You don't really need to know the ins and outs how these transforms are made, but he applied the Z transform to it to level them out, and now you've got a really nice indicator here. You go, okay, overvalued in the red zone, you can sell in these peaks. Undervalued here, you can catch the bottoms. So you can start to see how these on-chain indicators can start to be made. And then Philip Swift did the Bitcoin momentum, which is just a really simple indicator, but I really like the visualization. This is just the sheer amount of capital in Bitcoins moving on chain, and you can see all of these bull markets are driven up by sufficient investment volume, enough Bitcoins moving between investors. And we're in this zone here right now. This kind of answers the question of is the bottom in? And I'll take to the next slide. This is it zoomed in a bit, and you'll see that like the behavior of investors. This is how much capital is moving between investors, and these are the cycles we're going through. They run through behavioral repeat patterns. We call them fractals. 1, 2, 3, 4. 1, 2, 3, 4. And then a little blip in there, a little notch. And I tweeted this out and saying, this is the heartbeat pattern of Bitcoin carving its bottom. Right there, because the fractal is repeated. For this to be right, we need to see this drive up over the next few months. And once I see that, then it's like 100% complete, really. That is the bottom confirmed. But this already tells me this is most likely a bottom, because we've come down off this bear market. We've had our first blip of proper investment volume, and it's taken us out of the bottom. And so that's a very good sign. Like, there was a big debate. Is the bottom in? And we said inside our fund, we were kind of like the mega bull bears for where were we? If the price was here, we were like, this is the bottom's not in. It looks terrible. It's terrible. We switched somewhere in here internally. I said on Tone Vay's show, I think 66% chance the bottom's in somewhere around here. And what happened was these are all estimates of capital flows on the blockchain, and we were getting bad data, and the data we were getting was drifting. And but in the end, what happened was Nick Carter from Coinmetrics gave us their latest estimates, and we could see that they were much, because what we saw were there was not sufficient capital moving. It was much lower. When we got the new data from Nick, it showed that no, this is really the bottom's in. So, and then 2019. So this year, David and I at the fund, we've done a lot of work on taking some of these indicators, and a lot of it's turned out into, so these kind of things here are oscillators. They oscillate. They tell you tops and bottoms, and it's really good when you've got this indicator, because like if we're at a top here and that's bottom here, the trend is down. So the safe way, if you're a trader, the safe way is to short. And you want to know what the overall trend of the market is, and when it hits this bottom zone, it starts going up, you want to trade differently, change your strategy. So that stuff's really important for a quant fund. But we did some of these other things where we took the models we had and we put them on the price domain. And so this is a visualization of NVT, like the capital flows and the kind of the capital flows churning on blockchain, and we're mapping that back to price. Obviously, we're taking averages. You've got to measure what length of time the capital that's moving is, and so you have these different lines. And this gives you an idea of what the organic capital flows are. It is kind of laggy. It lags the market a bit. But, right now you can see we're up here while this thing is down here. And we've never seen this in the history of Bitcoin so early coming out of a bottom. And that deviation from where the organic value is and where the price is kind of close to what you see in this crazy mania phase near the peak of the market. But we're at the early stage. So my thinking is this is the whales short stopping everyone, playing the market tactics to push the price up for profit. Yeah.
So most of these charts are relying on funds moving on the blockchain, right? Now, is there, and this mostly I'm looking at it from the momentum standpoint. We're looking to have momentum built up and more funds moving, right? Now, is there any way that because of the new investors that are coming in, and we didn't have offerings like Cash App and like Robinhood, where people will most likely never be taking physical possession, thus having a transaction put onto the blockchain? Is there any way you see that having a long-term effect where a lot of these new retail investors are not actually going to be integrating or actively utilizing private keys, touching the blockchain, etc.?
Yep. That's going to happen, and it's already started to. I mean, I think that what's happening right now is that we're seeing a deviation on NVT. It's going much higher than normal. So that could be attributed to what you're saying here, that deviation. But for it to be, like, I've got another chart that's fast responding, this deviation to occur so sharply, probably wouldn't be explained by this sort of gradual motion, and ultimately everything's moving. Like, NVT is not going to last forever. As things move off chain, we'll see less and less. We get less and less. It's kind of like we used to have a sharp vision, and now it's getting a little bit blurry, you know. And eventually, it might not be useful at all, and we'll have to use other indicators. This one is a model that I did, 2 of them actually. This is the top model. Can we see that on screen with the few people we got there? This is actually modeled off the average price of Bitcoin, the everything moving average, and you multiply by 35, and it just happens to hit all the tops. And I think that works only because we're in this nice inflation of an S curve of capital coming in. And so it gives you an idea of where the top of the market could be. It's currently at $50,000. You know, obviously the cap can go higher as as time goes on using this model. The purple line here is one I did using days destroyed, because when you move coins, it makes a difference whether the coin is like an old coin or a new coin. Like if I sold a coin to Deborah and Deborah sells it back to me the next day or the next week, that's different from, say, Roger Ver, who's had his coins for like 8 years and he's selling, because it's a different weighting. And it turns out if you apply a cumulative basis to it and do a few things with it, it starts to track the price, and it really tracks nicely the bottoms, and it's very useful. And if you're in this bear market and the price is coming down and down and down, or here coming down and down and down, and this model's going up and up and up, you kind of get a sense of where they might meet, and that's really useful for us as when we're trading, and we need to know roughly when to start changing our strategy. And I've just overlaid a whole bunch of stuff we've done. Each one of these is a different model for a different purpose, and so it's absolutely exploding, this field. It's like I had a phone call the other day from a big publication saying this guy's leaving, and he's looking to go into this field. So this job got invented 2018 essentially. It's a new job. And so I'll touch on altcoins because I think a lot of people invest in altcoins. This is the maximalist view. If you're a Bitcoin maximalist, there's only really 2 coins. There's a Bitcoin and then there's a shitcoin. And it's there's a lot of truth to it actually if you look at the market deeply enough. But I'll go into a little bit more nuance. So Bitcoin invented in 2009, and then we had we kind of had these protocol. I call it protocol coins, but not really protocol coins. Like we had these things. Oh yeah, we did. Like Litecoin came out in 2011, and Litecoin was pretty much a photocopy of Bitcoin. They changed a few levers, but it was useful because now we had another coin that was digital, and we could trade natively from one digital coin to another digital coin. So we now had a full digital market, and Litecoin had a place, and they called it the silver to Bitcoin's gold. And it actually acts as a kind of test bed of technology. You can try stuff out on Litecoin. It sometimes gets wrapped back into Bitcoin. And then, other things came out, Peercoin, a whole bunch of stuff, a lot of stuff that just disappeared. And then we had like utility tokens, and these are like I can now build a scarce token using someone else's platform. In 2014, we had a few that were built on top of Bitcoin, Counterparty and Mastercoin. And then in 2017, this stuff started to really rip when Ethereum came out, and you could build your ERC20 token, and people could then build, you're building a piece of software, you go, okay, I can now, rather than charge, $30 a month to access my software, I can charge my token to access the software. That means I can sell my token. So 2017, it was all the rage. I think the first one was Augur in 2016. They did their ICO. So prediction market. This is not the first, but this is the first on Ethereum, and they sold a few million. I can't. Who remembers how much they sold? It was more than 10 million, right? It was like 10, 20, $30 million of tokens. It's kind of like a Series B, Series C round for a VC. Typically you need to be about 5-6 years of age as a venture, done exceedingly well, have millions of users. Augur had no users. It had how old was Vitalik? 20 years old? Had a 20-year-old backing it, saying this is good stuff. And they raised more than 10 million anyway. I forget how much they raised. So it showed you could rather than sell your software for money, you could now make an imaginary token that's scarce, and then say future people that use it can access it, and I'm selling the token now and raise money on it. So in 2017, that's what we had. All the world started to turn their software into these tokens, and the public started to buy these tokens thinking this is the next Ethereum, but it's not a protocol, it's a utility token. I'm buying this token for utility. And if you ever work out the economics behind it, even if these tokens take over the entire world, like you got all of cloud storage like Amazon, turns out the token's not worth much. Much less than what Bitcoin or the underlying protocol coins are valued at, because the valuation of protocol coins uses a very different equation. And so I just say, unless you know what you're doing, don't touch these things, particularly over a long time cycle. And I think a lot of the stuff will just shake out. A lot of people got burnt. A lot of people bought their tokens and lost 99% of the value on them. And the new thing that we're starting to get, I think 2019 is probably not the first. It's probably predates that, but the ability to have a security token, which is kind of like, you can imagine it being more like a digitization of a shareholding in a company. It's something that generates income. Often it's a stake in an operation. So you can get really creative with it. You can have revenue share instead of profit share. You can do futures kind of stuff with it. And so this is a big question mark of how that would redefine the landscape. Remember, there's a $70 trillion public market out there. If you can solve this, you can now maybe expand the reach of these capital markets into maybe smaller size companies. I don't know, that's one. I know that you could do things around the real estate market around this, the $280 trillion we saw in the first slide. So they hold a lot of promise for the global economy. And I think I see this as maybe making the economy a little bit more efficient and maybe changing the dynamics around. But I'll take you through, let's go back to this utility token stuff, because if if you're a maximalist, you really want to shit on tokens, and let's just shit on utility tokens for now. Remember the investment cycle for the Bitcoin, and then we had the investment cycle for kind of what I'm talking about here, a new startup company bringing a new technology into the landscape, a piece of software often. Founders come in, right, and then they bring the angels, which are the whales, they're the guys that have a lot of Bitcoin. And then they get the institutional guys in, the VCs in, because the VCs now invest in this stuff. And they get them in early. They kind of solve this problem the VCs had sitting out here. They got in earlier, and they buy it at 90% discount. And then we have this new thing here called Buyers Group, where everyone pulls their Bitcoins together to buy roughly at 20 to 40% discount to get access to these utility tokens before it goes through the ICO process, and it's then sold to the kind of like the general public, the rest of us that are buying through this token once it's floated. So these guys are the privileged guys. They are the guys that have the contacts, 90% discount, 20 to 40% discount, and then we dump it to the bag holders, who are the public. And this is all while you haven't launched a product with no one using the software. And if you're lucky, it swings up. If you're not, doesn't matter. You've already made your money. And like Augur, to this day, I believe has less than 100 users concurrently. For like, has anyone looked at it? I think it's, how many millions is it worth right now traded? So yeah, it's kind of, this stuff I can't see being very successful in the long term. The incentives are all wrong. The whole structure's wrong. We've got a whole lot of people saying this is the future, but this does not look like the future to me. But if you're going to play with altcoins, this is what it looks like. This is the view of 1,500 coins, which is pretty much all the coins. Back in the time I did this analysis in 2017, and this is what it looks like. This is the price as they go up and down. The thing to note here is when we go up and down, this is a 100x. So if I'm this line here and it goes down here, I've lost 99% of the value of the coin. And you'll see that this line here is Bitcoin. This one's Ethereum. All right. So Ethereum is an altcoin, and it's done very well. It's deeper than Bitcoin. It's gaining higher. This is before it reached its other bear markets. Obviously, Ethereum came back down. But mostly, if you don't know what you're buying, and you're buying an altcoin, altcoins don't really, as a general statement, altcoins have not proven themselves to perform over intercycle between one cycle to the next. On average, you can roughly visually see you're buying at $1, you're selling at $1. And but what they do is they amplify the market. So if the market's going down, you're gonna lose more value, and then if the market's going up, you're gonna gain more. And so what altcoins are good for is you can buy into them when the market's going up, and you can get leverage. You can get leverage, and normally the way to get leverage is to put your money on the exchange and go margin long. And that means you're trusting the exchange to not fail, not get hacked, not get scammed or scam you. So like with altcoins, you can just like, I'll buy them, I'll get this leverage position, and then I store in my wallet, and then you can sell later. So generally that's how we look at it in the fund, what altcoins are interesting for, because we can go leverage over the bull market. And that's pretty much it. Most of these charts you can find on my site on chartswoobull.com. You can follow me on Woonomic on Twitter. Our fund, Adaptive Fund, Adaptive Fund. And right now we're running a alpha test. So if you guys want to do me a favor, and if you jump to this URL, charts.webull.com/LVL, there's an access code to get onto the alpha, because we'd really love your feedback on this product. And yeah, that's it really, unless anyone's got more questions. A few questions. Okay, this guy.
I'm not too sure when you said the quant funds came in maybe 2017. But and you probably have the most insight. I don't really understand that. How would you expect that to? We saw how it played out in the bear market. You said it didn't look like the previous cycles. Now, how do you expect that to look differently in the bull market? And is there anything we could capitalize in that way? Does that make sense?
Well, quant funds are here. I think the things that this cycle, the quant funds are going to get more mature. But like we've got like this cycle, I think it's institutional. There's two things. There's institutional money, and the other thing is massive retail. Like you will be like TD Ameritrade is you can buy Bitcoin through your online stock brokerage account. And I think those two things are going to shape it. And when you look at that, what it means is that you're pretty much greasing the wheels of the fiat inroads. You're reducing the friction from going from cash into Bitcoin. So I expect this cycle to be very compressed, steep. I mean, that looks really steep, but I think that's a little bit too steep and it's not organic. But like, see these early cycles, they're really steep. That's steep because it wasn't pushing much money. I think right now we're going to push a lot of money for the size of this thing. It's going to be steep. Like we used to, like if in the bear market, everyone's doing these picture perfect cycles and they're going to measure the days from here to here, here to here, and the next cycle is going to go to here as if it's going to obey this beautiful law. And I don't think so, because I think that there's a lot of fundamental things that shape it. And one of the things is the roads are greased for this to move fast. And the quant funds are getting bigger, and I mean, if you were to short squeeze, I mean, this is a technical term, right? But like, if you want to push the price up for profit, this is a lot of money to do this, like massive. I don't know how much it is. I haven't done the calculations, but I'm guessing it's going to be $500 million, $1 billion to buy this all up. Yeah.
Kind of going off the last point as well, we've seen like a lot of developments from businesses to make crypto more accessible to the everyday person, like the Cash App and businesses, just to make it more user friendly. But something recently that I'm quite interested in is the Financial Action Task Force is proposing a bill that would make it extremely difficult for any business that's dealing with virtual assets to actually do their business. They would have to do lots and lots of KYC. Have you took that into account, or like, is it on your mind at all, or do you have any ideas of how that might play out?
Well, my area is on-chain analysis. I don't really cover too much of the regulatory space. So yeah, I can't really answer that one. I know that Antonopoulos has always been great to say that if they banned it, if we went right to the end of banning it, and this is kind of like adding a lot of friction, what it does is it drives Bitcoin and crypto underground, and that ends up, he can't wait for that to happen, because then we have a full Bitcoin economy, and the price goes up as well, and all this sort of stuff. So like wherever you see where does Bitcoin really thrive, is places like Venezuela, where people's lives literally depend on having access to a currency that's not turning into nothing. And so I kind of think if there's hardship in that, yeah, he's right in that view. Yeah, I can't answer. It's not my field, but yeah, I'll just say I don't answer that one.
Question regarding since the investment landscape is changing from retail to institutional, would you also expect the patterns in some on-chain analysis to change? And
Yeah.
if so, what kind of signs would you foresee or expect to say, okay, this must be institutional driven, or maybe the herd is coming now because this indicator is kind of pushing?
Yeah, that's like we're constantly coming out with new ones. I think one was published on CoinDesk recently called the TAAR indicator. It's a ratio. Essentially, it was a ratio of the amount of value being moved on a transaction against the amount of addresses. So it kind of give you basically gave you an idea of the size of these transactions, and then they plotted on a chart, and you could like we took it actually, and I was collaborating with one of the quants in Ikigai, and we were playing around with. We made a new one, right? And it showed when is retail buying in, because they're the small minnows, and when are the whales buying in, and you could see the behavior over different aspects of the cycle. You know, the retail usually come in last, and they make all the wrong moves, and the whales tend to be more precise in their timing. And so, like, yeah, these constantly, the behavior's changing. Obviously, it'll impact when we start to have these professional funds, they're moving much more capital, and that'll have an impact. And so this whole thing is always moving. And we're constantly thinking about what the dynamics of the market is doing and what that looks like on the network. Yeah, I mean, I could show you, like, I'll just get rid of this. Here we go. Close that. And I was taking a look at this. This is my personal NVT cap. So I've put in a lot more lines here. And so it's quite a nice picture here. You kind of see how, like, remember in this bull market here, the investment flows were really high, and it meant that it was way undervalued in this zone. And you can see when these lines cross over, and they cross over upwards, that's a flip of accelerating investor activity driving up, and that's a very good early warning signal that we're coming out of the bear. You know, to answer that other question, is this a bear trap? Well, this is the investor activity. It's going through the roof. That does not look like a bear trap to me. You know, this was a bull trap. Sorry. This is a bull trap. It's going up, and the investor activity is going down. We've already had that. This is real fundamental activity going up. What's interesting for me in this chart is that, look, investment activity drives price. Right, it's driving the price. It goes up, and then the price follows. Right now, the price is driving investor activity. The price got pushed up, and now we think the retail's following it because the other indicators showing it's the small money going in. So you can start to look at these charts and figure out what is the picture going on, and then you got to think about this also. It's like, oh, maybe we're not picking up all the volume on the blockchain. Maybe it's going off chain. So that's skewing this whole thing lower, and it should be higher. And you got to make all these kind of interpretations of what you're saying, or what you're seeing. So yeah, it's not like hard and fast. Yeah. Yeah, Stephen. Throw him the mic. Got a few. Okay, good.
Oh, sorry about that. Thanks, Willy. I wanted to go back to your chart of the top in CVDD.
Yeah.
To get an idea of what we might expect, a ballpark of what we might expect going forward in the near term. But you mentioned a potential top of about 50K in the next cycle, and since like the bottom of Bitcoin in 2015, it was $250 or so, and the bottom last year was 2,800. Was that right? And
yeah. Okay. So here.
so I'd get like just a ballpark for top and bottom.
I don't know. I don't look at this very often, but let's have a look. Zoom that out. All the stuff is on my site, chartswoobull.com, so you can play with it. You can turn traces on and off. There's the purple line. Yeah, because it's really like we don't know where this thing will top out. And Philip Swift, who came up with one of the other indicators, the momentum indicator, did something around when these bottoms were, and he did this kind of extrapolation. And he figured the top would be around, I think it was $135,000, and it was somewhere in this zone here, using these kind of time-based extrapolations. I think conservatively 90,000. If it goes really fast, then it's up around this region here, which is in the 50,000 zone, isn't it? What is that? What does it say? It's 51,000. But like, these are models, and we don't know how it'll play out. I get a lot of questions like, essentially when moon questions is like, well, what price will it be? And we're not really oracles. We make models, and we're trying to interpret where it's going to be. And it's constantly changing, because it's like trying to catch. It's like a ball's coming, you're trying to catch it, and the ball hasn't even reached its apex, and you're trying to guess where it is, and then you've got to close your eyes and catch it. And so it's hard. And if you open your eyes and it's coming closer, you can get a better fix on it. And then you get all these people on, whatever you say, you're going to get completely trolled on Twitter because you said this or that. And reality is you're constantly trying to make your best guess of where the ball's going with all the wind conditions. And I think that we're safe to say, I shouldn't even say that. Right now, it's safe to say the top is 50,000. It's going to go up like that. I don't think it's going to continue like that. I think we're going to be up in this zone in the 90 to, I give it the 90 to 150,000. Like with a really wide, with a ton of salt. Play around. I'd rather you interpret it. Yeah. Yes.
So we've got quite a few questions from the chat.
Okay.
Is the correction from 9,000 over? And what confluence of indicators would signal accumulation? So the full question.
No, I don't think it's over at all. I don't think we'll come down from our. I think if you look at NVT signal, it's ready for a short. We're overextended above organic. You can even see in the previous chart that I had, there are key signatures showing that we're overextended. Doesn't mean that it won't go any higher, because we can go a lot higher, but it has to come back down. Yeah. And then what was the other thing?
What confluence of indicators would signal accumulation?
Okay. I want to see. Momentum start to move. I want to see. This fella move. I want to see all of your friends and family buy Bitcoin, and I'll see this move up. And I want to see the institutional funds buy Bitcoin. I want to see sovereign wealth funds buy it. I want to see trillion-dollar, mutual funds get exposure, and I want to see this line move up. And so when that starts moving up, and it starts to hit this next dotted region around here, then that means we're ready to move up sustainably with the investment volume. And that is another way of saying, because actually momentum is another view of NVT. It's just a clearer view in some ways. This thing starts to drop because the volume moving through the chain's really starting to get heavy against its valuation. So
One more. Would you consider making a Litecoin NVT?
A Litecoin. That's already made. It's Coinmetric does that. Turns out that most coins, they're not very organic. And so you're not going to get much signal. You're just going to get a freakazoid chart. Litecoin is it's one of the most centralized of the major coins. So it's controlled by a few hands. So what you see here is a sea of momentum of a really mature market. So that's number one. Those altcoins are very illiquid. You don't get very good signal out of it. But on top of that, all markets follow Bitcoin. And this is the reason why on my charts I'm mainly almost exclusively focusing on Bitcoin, because Bitcoin is the reserve currency of crypto. And when Bitcoin goes up, everything else goes up, and this thing goes down, so does it sets the trend. So this is the only thing I actually care about. And then you can go to like Masari with on-chain FX, and you can look at the NVT ratio. You can look right up, and you'll see NVT ratio against all the altcoins. And what you're looking at there is really essentially how valued or overvalued they are against the underlying activity. So whenever I see high NVT, like in sheer numbers, like it might be like 500, or I'm being exaggerating, versus Bitcoin at like whatever it is, 50, or you're seeing that there's a lot of players there that have bought a lot of coins and they're holding it and it's not circulating and they're artificially pushing the price up. So you can actually use it as all, like the price earnings ratio, you can see it's well overvalued for its underlying activity. So that's where it's useful on an altcoin, just to see how, like I take a snapshot, it's kind of very judgmental without going deeper, but it's a snapshot of how manipulated and what kind of tokenomic games that they play to push the evaluation up. So, yeah, NVT applied to altcoins.
Thanks. So this question is from my little brother who's at home watching the live stream. He's sick.
Hey, bro.
Hey, Oliver. So he's wondering, do you make use of regression tools to make predictions aside from the NVT and the 200 moving day average? And he had a couple ones that he was interested in, specifically ARIMA, auto-regressive integrated moving average, and GARCH, generalized auto-regressive conditional heteroscedasticity.
Oh, nice.
Yeah, so that was his question.
Yeah. So I'm not a big regression guy because, my background's engineering, and so we kind of did a lot of the stuff, but like not really. I don't use it a lot because I'm not very familiar with it. But I've been wanting to, and Aurum Wonder is like, we work with him and he does a lot of regression stuff. And so yeah, like one of the indicators I said earlier around the like figuring out whether it's retail or institutional, that uses regression models as well, because you kind of need to curve fit where the line should be, and you really needed to know about regression models. I'm really shit at it. Like I need to improve on that. But yes, like they help immensely. Like I want to figure out. I mean, I've got things I want to do with this, needing regression models to try and figure out what's. Yeah, I'm constantly trying to figure out how to improve this indicator because it's changing, and this dotted line that's flat shouldn't be dotted. It should be moving up and down. But what the normal oscillation band should moving. You could attempt to do a regression line across there to fit it. You can do all these other different things, and it's a very creative kind of like all the guys that are really good at this stuff. They're super creative. They kind of get by. And some of them are really good at the modeling side of it, but fundamentally it's the creativity right now that's we're finding of value, because this is all new. This is a completely chaotic new space with no books to read. So the people who are really creative on how do I see into this, and then they have their toolkit of statistical or mathematical tools, they tend to do well, and you can learn those. Yeah. Yeah. From the chat room. And how
So there are two non-Bitcoin questions.
Oh,
I'm
yeah.
happy to accept those. There's a question about, so Gospatig88 asks, besides Bitcoin, the only altcoin that interests me is Grin. No ICO, no pre-mine, no founder's reward, proof of work. Any thoughts on that?
Yeah, I don't have any thoughts. Sorry. I do like coins that are launched like that, where there's no ICO, there's no pre-mine, it's about as fair as it gets, because once you have incentives for someone to make a lot of money, a lot of crazy, dirty crap happens, and yeah. So I like that part of Grin. It sounds like a lot of the hardcore Bitcoiners have backed it in some way, and so the credibility of that project is good. So yeah, I can't really comment on the privacy technology. They're not claiming to be very fully private, but yeah, it's kind of, it pushes us forward. It's a new way of looking at blockchains.
And the other question was if you have any thoughts on initial exchange offerings.
Oh, okay. IEOs. Okay, so this is like, instead of the coin project putting up a website and maybe running their own ICO using, an engineer that's building some smart contract to do this token sale, they're moving to a more sophisticated vehicle to sell the token, and it now starts to look like the IPO world, where you get an underwriter, you get an exchange who people trust to say, you can buy the token off us, we'll dox you, handle all this sort of stuff, we already vetted this token, they're not going to take all your money and run away with it because we're selling it to you, you have to trust us. So it's adding layers of trust to it. It's probably cleaner than a ICO project. It's probably an easier way to regulate that, and so it's an improvement over the ICO process. Yeah, it's an improvement, and I'm not a big fan of like these projects raising so much money. I think it's fine to raise a little bit of money. Got to be practical about it. But yeah, it's mixed. How are we going for time? The Oh, okay. Did you want to? Oh, okay. So if you want to go to, I guess you just want to take a snapshot of the photo, don't you? Bing. Here we go. Get the PDF. Mr. PDF. Is that a PDF? Preview. And then we go to the end. Take a view of that. Take a shot of that. If if that'll take you to, because you can't get access straight and sign up. You need a code. We're only giving out codes because we only want people that they're really going to test it, and before we really launch beta, which is to the general public. Okay.
Yeah, so me personally, not my brother. It's not a math question. So I was curious about what you think of the promise of ICOs and IEOs and kind of the money sloshing around in Bitcoin and crypto to enable innovation and kind of different things that have impact in fintech and financial innovation and things like that. So it's a little bit off topic, but do you see kind of promise there with the way, for example, coming from a tech background, you have these people that make the biggest gains and how that's switching around. Do you see any promise there? Are there any availability for innovation or also availability for kind of switching around the way lots of money is made in tech and investing?
I think there was, like there are people that think the ICO is a major innovation of funding. Coming from the tech world, I think that it's a very major mistake. I don't think ICOs. I think that ICOs, when put into the context of new tech in terms of like software coming out, they're kind of masquerade. These are things that are masquerading as protocol layers. I think there's a lot of dishonesty. I think there's also a lot of people who aren't trying to be dishonest. They're just genuinely excited, but they don't know exactly what they're doing. And what they're doing is offering the public access to stuff that'll pretty much fail. If you're a startup founder, you probably got about a 98% chance of failure. Everyone thinks they're going to succeed, but reality is pre-seed, pre-accelerator startups is 2% success rate. And here we got people that haven't built their first product. They put a white paper out and then they're selling $10 million worth of investment to people who don't even know what these things are. And so I think this is a very dangerous situation, and it's exactly what regulation came in to do when it was built 100 years ago. So, it's not perfect. We're trying to, but you're seeing that people like entrepreneurs have created things like the Jobs Act, where we can now do equity crowdfunding at much lower risk levels, so we can get and invest in early stage ventures. But I do think ICOs are in general, the wrong direction. I think, well, maybe we should cap them to like $2 million or $1 million, because that's actually all you need to try and build something. You don't need 200 or 800 or $4 billion to build this technology. Seriously, why do you need $4 billion to build like EOS, right? I think that, okay. Time, is that time? Yeah, we're up to time. Okay, all right. Thank you, everybody. And thank you to Blockchain Zoo and Susanna, Rohit, for making this all happen.